Well, Happy New Year, everybody. I hope you're all having a wonderful start to the new year. So we're going to be diving in here. We got a lot of good stuff coming out here in 2025. A little project I'm going to start working on for y'all is we're going to do a small portfolio challenge where basically just start with some small amount, something that's very reasonable for the average person to be able to start investing, something like $200 a month, maybe $500 a month, something like that. And then it's going to be a public portfolio that everybody can kind of just peek in and see what I'm buying, what stocks look interesting to me. So what we're going to do now is we're actually going to go over my top picks for 2025. I'm not really going to be going over like PE ratios and that sort of thing. I'm more so going to be thinking big picture. Where is this company going? What's kind of the overall vision of why this stock is on my watch list? So the first one I want to take a look here is Nvidia. Now, with the emergence of AI, I don't think that the demand is going to go away. There's a lot of people talking about, oh, well, they bought all the GPUs already. So, and it's kind of a one and done thing. You had this really big customer and now they're just gone. I don't see that being the case because, so Sam Altman, the leader of OpenAI, he has publicly stated that he believes that they will be able to make artificial general intelligence in 2025. Now, what that means is it's going to need a lot more graphics processing units. And specifically what they need is parallel processing, which is something that graphics processing units excel at. So being that Nvidia is the leader in this space, it's only natural that they're going to be able to see massive growth because of it. And we're also seeing massive data centers being built by Amazon Web Services, Google, Azure, and these data centers are essentially going to be focused on managing AI workloads. Now, something interesting here is, so there's a guy named Jensen, I'm probably saying this wrong, but Jensen Huang, who observed that AI computing power doubles roughly every 2 years. And that's interesting because it's really close to Moore's law, which says that computing power doubles every 18 months. So if the demand for artificial intelligence continues to expand, it continues to double roughly every 2 years. And if it makes sense if you think about it, because essentially, even though it's just a chat GPT, right? Basically a really advanced chatbot, it still has to think, it still has to process, it has all these thoughts that it does before it can come up with an answer for you. So it makes sense that as we move closer and closer to AGI and then more advanced artificial general intelligence, that it's going to have more and more demand, meaning more and more GPUs. Now, there is a counter argument to this, which is that there will be improvements to the AI algorithms and models which may reduce the computational power and requirements. And I really don't like that argument because there's only so much that you can do with increasing the efficiencies within algorithms. So that's why quantum computers is such a big deal. So like, for example, this might be a little advanced, but so with regular computing algorithms, basically computer code works in ones and zeros. And essentially, in order for computer code to be processed, it has to pick a number between 1 and 0, and then it goes in a line, right? So this one's 0, this one's 1, this one's 0, and now we have 1, 1, and the line slowly ticks out. With quantum computers, it's different because all of them are quantumly entangled. So that means that every time that you have a computation done with one of the ones and zeros, they all come up with the result simultaneously. Those are called qubits. And so now I'm starting to ramble, but essentially what I'm trying to say is that you get to a point with traditional computers where they simply cannot compute any more information. It doesn't matter how many efficiencies you have with algorithms, you get to a certain point where they just can't handle it all. And so that's where quantum computers come in down the road. So I don't really like that from an argument standpoint, just because, yes, you can make some efficiencies and improvements, but eventually you are going to need something far beyond just GPUs. And even if you make efficiencies in the short term, you're still going to have massive demand in GPU power, because if it doubles if its thought process is able to double every 2 years, you're not going to be able to just simply code that away. I mean, it has to think in order to come up to solutions, and you can't jeopardize its thought patterns just to not use as much computing power. Anyway, that's my thoughts on it. I know I got a little off tangent there, started talking about quantum computers, but let's move on here to Tesla, because Tesla is a really interesting stock, and I think that a lot of people are, I think they're missing the big picture here with Tesla, and I think that we can see massive growth. So Tesla as a company, it has essentially saturated the electric car market within the US. And so companies can grow in two ways. They can either do vertical growth, which is where you pick a sector like electric vehicles. That's their little niche market, and you essentially dominate that market. And Tesla has done that. You have competitors like Rivian or other motor companies that are building electric cars, but nobody is dominating the market like Tesla. So now the question becomes, well, if I'm a company and I want to grow and get bigger, increase my shareholder value, what do I do? Well, what you do is you grow horizontally. And that's exactly what Tesla is doing with the Optimus robot. So the Optimus robot, if you think of it like this, right? You have one company, you got Tesla, they built the electric cars. Now, what would happen if a new company just popped up and they started building essentially humanoid robots that can do unskilled labor tasks? How valuable would that company be? Because that's essentially what Tesla has done, is they've created an entire company, not legally speaking, but I'm trying to get the idea across, is that this is effectively an entirely new pillar of revenue for Tesla. And the demand for it is going to be absolutely incredible. Elon Musk is estimating that they could see billions of these across the globe. Now, obviously, that's not going to be done in 1 year's time. I think that Elon said, I believe it's end of 2025. So end of this year, they're going to start launching these and selling them to the public. And so, I mean, it's not just the Optimus robot. He also has the robotaxi, which is going to drive a lot of revenue for Tesla. So he essentially has two other sectors that are going to drive massive value into the Tesla company. So let's figure out how many of these robots Elon would need in order to sell to double the company's value. So last year, Tesla did 1.7 million in car sales for roughly 17.7 billion. Elon said that the cost per robot will be between 20 and 30,000, so we'll call it 25,000. If we take 17.7 billion, divide that by 25,000, we get 708,000 units of the Optimus robot would need to be sold in order to double the company's revenue. That's easily doable. I mean, from my understanding, these things are not as difficult to build as a car as far as material, the amount of materials you need, and time-wise putting everything together. So he could very easily be able to put out 700,000 of these, in a year and a half, I mean, however long it takes, and that company value has now doubled. So, I mean, you can really see the demand for these things long term, especially as, they catch on. I think in the US, it's something estimated like 25 million of these robots are to replace unskilled manufacturing jobs. That's 25 million. So that would be 25 times the annual revenue of what Tesla currently has. Although it's not, again, they're not going to sell them all at once. It's going to depend on a lot of things. The important thing that I'm trying to convey is the amount of value that these robots are going to drive into the Tesla stock. So let's go ahead and take a look. Okay, so moving on. Now, this isn't really a stock, but it is too big of an opportunity for me not to mention, and that is going to be Ethereum. It's no secret if you've been following my channel, I love Ethereum. I think that it is one of the best assets to own on the planet, and the reason being is because Ethereum is a decentralized blockchain that allows anybody to build their own ecosystem on top of it. Now, what do I mean by that? For example, Sony, they have launched their own layer 2. And if you don't know what a layer 2 is, all it is a scaling solution. Companies can create their own blockchain on top of Ethereum, which reduces fees and allows for quicker transactions, more efficiencies, and it's more user-friendly whenever you scale this way. So what companies are realizing is that if I build my own layer 2 blockchain, I can then have more customability, I have more control, I have more I can customize it to fit my regulatory needs if I'm in the finance sector. And what this does is it allows them to create an entire ecosystem that is theirs, where you can create stable coins. For example, if you're JP Morgan Chase, you launch a layer 2, you create your own stable coin. That stable coin is then used on your platform in order to interact with loans, credit cards, you name it. As far as banking goes, you can program it and put it on Ethereum, and it increases efficiencies so they don't have to have as many people employed. It pretty much puts the risk of fraud at zero because it's all accounted for. You can track it very easily. There's no funny business that can kind of go on with it. Meanwhile, if your customers are using these applications that you have built, you're collecting fees the whole way, and it's all being processed by the Ethereum blockchain. Everything settles on the Ethereum layer. You can build these other blockchains on top, but it all has to trickle back down to Ethereum eventually. So what this translates to is large companies like Chase, BlackRock, Vanguard, Fidelity, Sony, Samsung, they bring their brand, they bring their trust, they bring all of their clients onto the Ethereum blockchain. Once they have their blockchains and infrastructure built out, they're just going to sell it to their client base, and then everybody is going to be onboarded onto Ethereum overnight. So please do not sleep on Ethereum. Do your own research, check it out, because I believe that Ethereum will become one of the most valuable assets on the entire planet as it becomes the next layer, the next evolution of the internet. And I mean, if you're concerned about, are we still early? Is it too? Has it created a bubble? We are so early. Imagine this, a future where people using the Ethereum blockchain will be as commonplace as you using the internet. That's where this is going. There's not going to be a single person that's connected to the internet that doesn't use some application or some stablecoin or product that is attached to Ethereum in some way. And so, okay, long term, well, actually, let's step back. So this cycle, I think, bear case, 5,000 to 7,000, and by this cycle I mean 2025. By the end of 2025, I see bear case 5,000 to 7,000. Base case, I would say 15,000 to 17,000, and bull case, I would say 30,000. So that kind of gives you a range of where I think it's going this year. Long term though, and that's really where I'm interested in it going, is long term, I think that 166,000 per Ethereum is very, very likely. Reason being is the internet itself is valued at roughly $20 trillion. You take $20 trillion, divide that by however many Ethereum there are, and you come up with 166,000. That should be the base case for it if it just becomes as widely used as the internet. That doesn't take into account if, like, for example, what BlackRock is doing with the real world assets, and they're going to start tokenizing everything from stocks to bonds to treasuries to mortgages. Everything is going to end up being tokenized because it's much more efficient, saves a lot of money, and eliminates fraud. All of these assets are going to be tokenized onto Ethereum. I think long term, the market cap at maturity could easily hit $100 trillion, which puts it around $1 million per coin. Not to mention that the supply is actually decreasing over time, and the more people that use the network, the more Ethereum that will be burned. So it's really the first deflationary asset on the planet. So next one that we're going to be talking about is, of course, I can't talk about Ethereum without talking about Bitcoin. So, everybody talks about it. Bitcoin's digital gold. No surprise that world governments are beginning to buy it, because at the end of the day, Bitcoin is extremely scarce. There is only 21 million Bitcoin, and I think it's something like 19 million are actually mined and out there. And then something like 3 million of them are estimated to be lost to just early adopters that lost their private keys, or Satoshi's. I think he has like 1 million that have just been lost or inactive this entire time. And to kind of put it into perspective, and this is getting into cuckoo land, so you can laugh at me whenever I talk about this, but gold really isn't scarce if you think about it. Gold is scarce on Earth, but as humanity evolves and we start traveling the stars and whatnot, you can have one asteroid that is, $100 trillion worth of gold in one asteroid? It'd be foolish not to realize that there are tons and tons of assets just floating around in space that as we start exploring the stars and whatnot, that people will start mining asteroids, and the value of these items, these precious metals, will plummet into the ground. Now, this is like 50, 75 years, 100 years into the future, but the point I'm trying to make is that gold isn't going to be scarce and considered valuable forever. There's going to come a point when people can just go and pick it out of the sky because there's floating rocks the size of houses that are solid gold out there. So something to think about. But anyway, back to now. The reality is that world governments have started to adopt it. So the U.S. government's estimated that they're going to be buying around 1 million Bitcoin over the course of the 5 years. Now, this is a couple things. One, it's going to add constant buy pressure to Bitcoin, and that's effectively what the halvings do, except the halving reduces sell pressure because miners go out and they start mining and they have fixed costs, like electricity, for example. So whatever reward they're getting, they have to come out and sell those Bitcoins in order to pay for the electricity bills. So by increasing the amount of people that are buying the asset, it works in the opposite way because you have buy pressure. So over the course of 5 years, you're going to have the government buying 1 million Bitcoin. And if the United States does it, you can guarantee that other countries around the world are going to start buying it and holding it as a world reserve asset. So you set up a situation where you could potentially see like the biggest bull run that Bitcoin has ever seen, because we've never seen this much buy pressure come into the market before. And there's not a lot of people that are willing to sell their Bitcoin, especially below 1 million. There's some, but not a lot. I mean, once you start getting into price discovery, who knows what's going to happen. So I don't think that it's something you should sleep on. If you don't know anything about it, I highly recommend that you start learning about Bitcoin, because just like Ethereum, cryptocurrencies are here to stay. They are not going anywhere. So getting back to stocks, I think the other one that is worth mentioning is AMD. I think that AMD has kind of been lagging behind, and this kind of goes into the AI narrative. I think that AMD would be incredibly foolish to sit there and not go after the AI market. In fact, they already are. So I think that I'm more confident with Nvidia because they're an established market. They're the dominant player, but I think that there's more upside opportunity with AMD because they have not really seen the adoption that Nvidia has. So as they're shifting focus and beginning to go after the AI market space and data centers, I think that we could see a nice push on AMD in 2025, 2026. And something to keep in mind with all of these that I've mentioned, they aren't just buy and holds for 2025. These are all things that I'm going to be keeping in my portfolio for many, many years to come. I think these are blue chip buys, but these are kind of just my general thoughts on narrative, where I think that each of them are going long term, kind of big picture view, and not so much just nitpick, this company made X this year, their PE ratio is this, or their price to their earnings, their EPS score is this, et cetera, et cetera. It's more about thinking into the future. What are these companies going to go? What the roadmap is, where the company is overall going. So if you have any questions, drop them in the comment section down below. And until next time, I'll talk to y'all soon.